Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and with me somebody very, very special joining in on this edition. Mr. Ashish Chauhan joins in. He's the MD and CEO of National Stock Exchange. Welcome, sir, and thank you so much for speaking to us on the sidelines of the BT India at 100 Summit. The markets are already at an all-time high levels. We've been seeing a recent bull run take place. But I want to understand from a long-term perspective. We're talking about the vision of India over the next 24, 25 years when India reaches 100. Tell us, what role will Indian stock markets really play in the overall growth of India over the next 25 years, sir?
In a way, the Indian stock markets have played a stellar role in India's growth over the last 30 years, and they'll continue to play the role of helping industrialists, young entrepreneurs raise funds for their businesses and, of course, create more jobs. So whichever way you look at it, the stock markets in India have been the places of hope, of joy, of even when they go down, the sorrow. And so effectively, the stock markets is where the entire world, all economies, kind of predict their future, how good it is going to be. And I think in some ways, India is at a place where it's going to grow very rapidly. And although it's a per capita income, very low per capita income country, it is a very robust stock markets, among the best in the world, and pretty much one of the largest in the world, the fourth largest. And that's where basically I think going forward is going to play even more important role in capital formation, in job creation. And overall, it shows the governance of the country, how people trust each other and invest in each other's businesses. Unknown people investing in unknown people's businesses is a huge leap of faith that requires tremendous faith in the governance, on the government, on the regulators, on exchanges, but also in companies and their management. So I think overall, if a country trusts each other more, it's going to become more prosperous. And I think next 25 years are going to be very important in terms of India's growth, but also India's place in the world.
Absolutely, sir. Since you talk about India's place in the world, everybody is talking about how the next decade will be India's decade. We're also talking about how G20 presidency has further elevated India's position in the global context, the significance that India plays right here. Now, when one talks about the average Indian investor, over the next 25 years, if someone wants to create wealth for themselves by participating in the Indian equity markets, how can one really achieve that goal?
Yeah, in a way, if you look back, say last 25, 30 years, Nifty started in 1996 at, I think, in base of 1995. I think November 95 was the base. And it was based at 1,000. Today, it is 18,000, 19,000, right? And on top of that, if you add all the dividends which you receive, it would be probably 23,000. In literally 25 years, your money, if you had invested in the long run, not traded too much, it would have gone up by literally 22, 23 times. And in a way, it was a slow growth times those days, right? All of us think that India is going to grow much faster on the back of the new technologies, on the back of the new confidence, and also the way India is now organizing itself. I think it's going to grow much faster. And if it does that, then naturally, if you continue to stay, but if you believe in stock tips or want to trade in derivatives and options and futures, you have to be expert. Otherwise, I would say go to a mutual fund, invest your money, keep on putting SIP, and basically your money is going to grow if India is going to grow, right? So that way, I would say if India did so well to increase retail investors' money on an average by 22, 25 times in last as many years, next 25 years it can probably do even better. And that's what, but we need to remain disciplined and invested. Sometimes we get really excited and sell out when markets go down or buy when markets actually are very high. So idea is to do discipline. If you are not expert, go with mutual funds or portfolio managers. Let them do it for you. But if you are not invested in India, I have a very little doubt that your money will sort of not grow as much
Yes.
as you would have invested in stock markets.
Well, I'm very happy that you pointed this out, and I'm going to ask you the next question in the context of the foreign institutional investors now. You interact with them on a daily basis, so many of them. We've recovered almost the kind of losses that we had over the last year, fully now in 2023. Going forward, do you think foreign investors will have that kind of confidence in the Indian markets vis-a-vis the other emerging markets to consistently put money here?
In a way, foreign investors are basically people who would look at any markets and invest in it because they believe that it's going to grow well. And of course, they need to also worry about their cost of capital. If the cost of capital continues to grow in their parent countries where they come from, where they borrow or take money from their investors, if that continues to grow up, there might be a temporary situation, just like now where Fed and European Union both are increasing the interest rate. But overall, in the long run, given the fact that China is suddenly become literally a zombie economy, and Japan also is an old economy, Europe is old, pretty much this is the forward-looking, high-tech, well-organized country that is there. And I have no doubt, given our structures, our governance of markets, of companies, pretty much the best in the world, I'm sure we will have many more investors coming into the markets going forward from abroad also.